Moving average. In this topic, we're going to be discussing a very special indicator. This yellow line here is known as your moving average, or for short the MA. So its job is to literally identify support or resistance. Okay, so you can think about it as a moving support and resistance. All right, let me further explain this. So in a downward moving trend, meaning that we're going this way, the moving average should act as a resistance identifier, okay? Because it needs to pick up the movement as we go downwards. It's pointless for us to want upward movement while we know that the overall direction of the market is bearish. Likewise, if the market is going upwards, it means the moving average should then also dictate the support levels, okay? Because it's pointless for us to sell in an overall bullish market, okay? So if you're wondering what's a support, what's a resistance, what's this guy talking about? So all your support levels are the parts where the market goes upwards. So support, scroll down here, support, okay? So those are all support areas, and resistances are on the opposite end of it where the market goes down. So resistance, okay? Same down here, resistance, okay? So those are supports and resistances. So in the case that the market is moving downwards, we expect the moving average to be able to help us identify this point here, okay? And as it's moving, to then predict where this point, the second resistance, will happen, and keep on doing that. Touch there, market goes down. So we expect as it's moving here, the market will then go to the moving average, touch it, and then start building a resistance, and the market continues going downwards. Right? So that's the moving average acting like a resistance. Then in an upward moving trend, we expect then the moving average will then identify or help you identify all the support areas where the market will bounce upwards. So we expect that when the market gets here, once again, it'll touch the moving average and then start moving or continuing going upwards. And that's literally how moving averages work. Now with the example here, so I just took a screenshot from an actual live chart. So let's create some space here. Let's move this way. So our moving average here, alright, the price is moving, touches the moving average, and we act as a resistance over here, okay? The market moves lower and comes up. So in essence, as the moving average is tilted downwards, I think we can all see that. Because it's tilted downwards, this is a moving average that will identify resistances. So we touched the yellow line again, picked out a bit, but finally found resistance because the market then started moving downwards again. And then the market then just shot up on top of the same moving average right here. So here they jumped to the upside of it. So this is then known as your breakout. That's when the market aggressively breaks your moving average from the downtrend, and then the trend starts moving upwards. So now officially it's acting as a support agent. Okay, so it's identifying all the support levels. Let's take an example. So now the market shot up, now it's coming back down. Alright, now the market gets there and finds a support instead of finding a resistance. It tries to move up a bit here and then comes back down and finds a support again over there. Okay, so now the same yellow line that used to act as an agent of resistance is now acting as an agent of support. It's identifying supports. Alright, so that's literally how a moving average works. So how you would have done it is, as soon as this market came down here and you understood that the tilt is now upwards, we're looking for buying opportunities here. And then as the market came in, went here below average, came above average, we were waiting there with a buy stop order, and we set our TP up here and we set our stop loss down here. So as soon as they came, took a curve at the limits, started building up, we decided, you know what, upon this break of resistance, pick us up, take our buy stop, and let's go up. And the rest was history, right? So just look at the tilt. If it's tilted down, basically we're looking into selling opportunities. If it's tilted upwards, we're looking for buying opportunities. Right, so I hope you understand what moving averages are all about at this point. I'm going to take a few examples on the actual MT4 so that we understand different types of moving averages and how you can play around with it. Let's take this example. We're currently sitting on the USD CAD on the 4-hour time frame. So if you click on this button here, it'll drop down and show you a list of all the available indicators you have on the MT4. If you go under trends, you'll find the moving average somewhere around that area. Click on moving average. If you press on reset, it will actually set it on the default setting. So by default under parameters, your period is set at 14, your shift at 0, your moving average method at simple. Okay, so there's other methods such as your exponential, smooth, and linear weighted, okay, which at this point are just basically equations trying to solve the same problem. So by default, we're going to go with simple. Apply to, you can apply to closing price, open price, the highest prices or the lowest prices, or the median prices. Again, at this point, same thing, trying to solve the same problem. The style, we want the line to be red. You can choose whether you want it dotted or not, but I just want to increase the thickness. Let's make it as thick as we can. Alright, and all you have to do at this point is hit OK, and there is your moving average. And like I said, if it's tilted downwards, it'll act as a resistance. So a resistance there, a resistance here, a resistance over there. Even though it came up a bit, it still went down and acted as a resistance. Another resistance over here, came, touched, and moved back down. A resistance again over here where they played up there a bit and then moved downwards. Then started tilting upwards and then started acting as a support. So support over there, support over here, there, and we expect it to act as a support here. So even though it's playing here a bit, since it's still on average tilted upwards, we expect it to keep acting as a support. So let's zoom out a bit so we can see the full picture. So you can see on average, as long as it's moving downwards, as long as the red line is moving downwards, we should be selling because that's places or points where we find resistance. And when the moving average is tilted upwards, we'll find on average buying areas. Right? Now you might be asking yourself, why should we use 14? Why can't we change that number? So look at what happens when we change that. So we're gonna use 50 in this case. Focus on the line and see what happens to it. Alright, it immediately starts smoothing out. And what could be the reason there? So basically when the period was 14, it was counting 14 candles backwards from where it is currently. So since the first candle here is the most recent candle, it will start counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, so it will calculate 14 candles backwards and take the average of those candles and then paint a line accordingly. Now the 15 moving average is counting 50 candles from the first candle, which means that it should be much smoother because it's taking an average of 50 candles. And obviously, let's zoom out again. If we increase this number further, let's say to 200, it will become much smoother because now it's taking 200 candles into consideration. Okay, so that's what will happen. So let's go back to the 50, leave that in red. Let's add another moving average. Let's go back to the 14 moving average. Let's make it blue this time around and zoom in and go back to the beginning. Okay, so if you remember, the 20 moving average, or I mean the 14 moving average, is the reason that we're catching this arrows that we got here. So we caught here that we're selling because we're still on a downward tilt. We sold here because of the blue moving average. But because we slowed it down to 50, we start seeing the reason of why the market gapped in or broke in and turned at a much higher price, because they were turning at the 50 moving average instead of turning at the 14 moving average. Same to when they went to the top. So here we expected that will act as support as soon as we touch the blue line, but the market then came inwards. So we expect that then they should then react here as support. So as soon as they touch the red line, we expect they'll start moving upwards because we are tilted upwards. Yeah. So they literally do the same job. So I hope this video helps you out. I hope it really explains what moving averages are created to do. They're created to be moving supports or moving resistances for you to forecast what will happen before it happens. Alright, so that's it for moving averages. Leave me your comments below. Let me know if I've left out anything or you want me to add anything to this specific video. Till we meet again, peace.